All right, everybody, welcome to the midweek update. I'm going to try to do some midweek updates either on Wednesday or Thursday, whichever day either we get more action or if whatever day I feel like I need to relay something important. But I'm going to try to do streams on Sunday to kind of set up the week and the expectations that we have for the week. And then we'll have a midweek update on Wednesday and Thursday to reiterate our expectations, and also to take a look at price action that has developed to look at any new interpretations that we can see. But just like every stream, what I'm going to do is I'm going to try to spend time on all the counts, and on the higher time frame ones, I'm going to try to spend less time on it because they're not as important as recent time frame, like recent price action that is occurring right now as we speak. But I still think it's important to keep in mind all the counts on every single time frame. So we're going to continue forward with that. So right now we have two long-term counts. There's two ways to look at this. We either have it as a cycle is complete. We have a full 1, 2, 3, 4, 5 for cycle 1. And this is about 10 years, which is a nice sweet spot for a cycle, which usually takes about 10 years. And this is where it gets a little tricky right here. It's debatable to say that this cycle 2 is going to be just as long as these primary corrections. So these primary corrections were all about a year long in time, about a year or 400 days. When it comes to the cycle 2, I would truly expect almost twice as much of the time spent in this correction. So there's potential that instead of being right here on Bitcoin, where we've already completed our A into B and we're working on our C, just like right here, how A into B and we're working on our C, instead of actually being right here, there is that potential that we're only right here, meaning we still have a large B leg to go, and then our C leg to come after that. So there's always potential that this is still in motion. We don't know until we get there. We need more information to make a better representation of what we're seeing in price action. And we can say the same thing with being in a 2 or being in a 4. We talk about this as well. With the cycle complete, we're working on our wave 2 right here. With the cycle not complete, we're still working on our wave 4 right here. It's the same thing essentially. We're not sure where we are within the cycle, but we know the directional bias. We know where we're heading, and we know what to expect afterwards. What the right count is in that time, we will only know until we see these legs develop and see what kind of price action it develops as. Whether it be a nice impulse or if this was just a correction. So this could be a 1 or this could be a B. Just like with our cycle, we could be working a B, come down for a C, or our cycle isn't complete and we still have one more leg up. Essentially saying Bitcoin is right here at this point, or we have just one more leg to go down and then we finish our impulse up for a fifth leg. So this is still valid. It's not invalid until it passes this invalidation point. So we'll keep this in mind, but this is more of the alternative, I would say. I'm looking at this more as a primary count that we've already completed a cycle and we're working on a cycle 2, which does has large implications, but same as this one. Saying that the 4 isn't over and we still have a fifth leg is still large implications as well. But in current time, I'm sticking with this as the main for right now. So that was our long-term counts. We got two of them, the primary and the alternate. Now let's take a look at the two high time frame counts. I guess we actually have three in a sense, but one of them is a variation per se, which means it arrives at the same analysis that we still have another leg down, but it just explains it differently, which I can actually go over right now. Let's go ahead and go over that. So essentially, we have our high time frame counts, which it's still valid. That's the one thing is it's valid, but when we look at this 2 compared to the 4, it seems pretty extended in comparison to the 2. But we always talk about with Elliott wave that we want to try to keep things as simple as possible first, meaning you don't want to have a B C into W, A B C into an X, A B C into another W, into an X, into Y. So we have WXYs within WXYs within WXYs. Because truthfully, when these rules came out for Elliott wave theory, we're not typically supposed to have complex corrections within a complex correction. You can't have a W, X, Y, and then within this X have another W, X, and a Y. It just not typically allowed by Elliott wave rules. So that's why we try to keep things as simple as possible instead of having WXYs and WXYs. But given how these rules were made almost 70 years ago and the developing and evolving markets nowadays with the leverage and the algorithmic trading and the bots, I'm inclined to agree that these rules do need some revision and they need to be reevaluated because there are some counts where we have a WXY within a WXY, like this price section here, for example, that there is absolutely no other way to count this validly, no other way to count it valid without having a W within a WXY. So there are some instances where it's you can't avoid it, but we want to try to avoid complex corrections within complex corrections if at all possible. But right here we had a nice clean ABC right here, ABC for W. Then we had a complex W X Y for the X, and then another ABC right here, ABC for the Y. So there are instances where you truly can count it without having a complex correction within a complex correction. But once again, we try to avoid those if at all possible and try to keep it as simple as possible. So that's our high time frame count right now, the primary, that we are still in a large ABC where we completed an A right here, completed the B, and we're working on the C. The variation I was speaking about was this, and this was our primary for a while, but given our arguments with the cycle, where potentially this is all just a one, or this could just be a one, two, three, four, five for a one. If we did get to that point, and then we have a large W, once again we'd be stuck with the same problem I was just trying to avoid. We'd have a W right here, a WXY within that W, and then this WXY will be part of another large W itself. So then we'd have three complex corrections within itself compounding, which is something, like I said, we try to avoid because it doesn't help us distinguish the next move, the next direction as easily as it is when keeping it simple. Because we're trying to discern high probability trades, and we're trying to understand the next high probability move. So there's nothing wrong with this count. It's just a variation because once again, we still have the main count as this being a one, two, three, four, five. It's just interpreting it just a little bit differently, where this is just comprised of zigzags. So it's a valid count. It's just a variation. That's all. The alternative is, once again, we have our W right here, complex X. We have a Y, complex X, and then we're working on our Z. So given that we have two high time frame counts, we also have two midterm time frame counts. And it all hinders on this leg right here, essentially. This whole leg that's occurring right now. It all hinders on if we have completed a 2, and by this I mean we are impulsing down. We impulse down for a 1, ABC up for a 2, and the 2 is already complete. This minute 2 is already complete. Given that, we are looking for this to continue impulsing down. 1, 2, 1, 2, another 1, 2, and then start to see some acceleration downwards to continue the 1, 2s down. This is all hindering on this 2 being done. There is potential this whole structure is not done yet. This whole structure really is not done until it starts to create bearish market structure below this. And sometimes that's what confirmation is. It's not clear until after you get confirmation of that count. But considering that this may not be done, we also have our alternative midterm timeframe count, which is that minute 2 is not done essentially, where this could potentially just be a large flat for our wave 2. Since it already came below the origin of A right here, because A is right here, we're expecting a expanded flat because it's already gone beyond it. There's potential that if it does complete this, it could just end up and terminate right here as a running flat. But running flats typically occur less than an expanded flat. So we're going to be looking for an expanded flat over a running flat, but that doesn't mean that running flat cannot happen here. So given this right here, this is what we're looking for. We're looking for a 3-3-5 where we have A, B, C, A, B, potential C right here. And then we're going to look for 1, 2, 3, 4, 5. So this is our flat, the 3, 3, 5. Given this, we have time invalidations and we have price invalidations. So if this goes beyond the 1.382 and continues to go beyond it, we would consider this almost invalid because B's in the flats, they don't go beyond the 1.382. This is kind of another hot debated topic in alleyway world. There are some that will allow the 1.618 or even the 2.0. But me as a purist, I would not allow anything beyond a 1.382 for an expanded flat. So we've got a clear price validation. And then same with time. We talk about time of formations and wave degree a lot because it helps us understand where we are within a cycle and if we're starting a new leg or within a new degree. So given that, we also look at the average time of completion for each wave, how much it takes for a minute wave to complete, how much it takes for a minuet wave, for a subminuet, micro, submicro, minuscule, what have you not. So if this is the 2, we don't want to see this go beyond a month because the maximum time frame for minutes is typically about a month. So essentially right at this point, this 30 days right here, is when I would either look at the structure as almost being completed. And when I mean almost being completed, I'd really want to see at least the 1, 2, and the 3 already being formed. So we're working on the 3 at least at this point, and we're on the 4, working on the 5th. I'd want to see us halfway being completed with this. If not, and it doesn't look right, we would start to think that this is a different type of structure when we get to this point. If it doesn't look reminiscent of an expanded flat. What we would want to see is this terminate around 2 to 3 weeks. That's typically the sweet spot for my newts. So it doesn't seem likely that it would complete that unless you're looking at this diagonal differently. You know, you could actually finagle it into this and it would still be valid, as this is a one, two, three, four, and then we're just gonna come down for just this fifth right here. Then we come up for one, two, three, four, five. It depends on how you're looking at this diagonal. If the diagonal stretches out in time, I'm gonna expect this probably to go to about a month long. If we finish this diagonal here by the end of the week and we start coming up and creating bullish market structure like on the weekend per se, we're probably going to look for this structure to end around like the 3 week time frame, the average time frame of completion. So those are that's our second midterm time frame is either minute 2 is not done or minute 2 is done. It was just a quick sharp ABC. There's potential for that. Now, short term, we still have where'd this go? Where did it go? We still have two short-term counts. I'm getting a little bit worried on the primary short-term counts because due to how much overlap and correction is here, yes, we can say that this is potential one, two, one, two, into another one, two. The thing that worries me about this is just how much of an overlap we're getting without really maintaining that bearish market structure. Yes, we're making lower lows and higher lows and lower lows and higher lows and lower lows essentially, but it's really not deviating from these swing points very much. It's more just barely going below it or barely going above it just to continue that bearish market structure. That's not really what I want to see for a 1-2-1-2. It's still valid, but it doesn't have the right look. Once again, we talk about validity. That's the first thing. If it's valid, if it's not valid, we're not even going to bother with it. We're not even going to look at it. So this is still valid. Second thing is probability. Right now, it's getting a little improbable, just because of how long this two is a comparison to this two. This one is so much shorter than this two. It may be unlikely that we are seeing a 1-2-1-2 because typically the smaller degrees don't exceed in time the larger degrees. This is more true the higher you go on time frames. So what I mean by that is when you start getting to minor waves or intermediate waves or primary waves or cycle waves, the higher you go up on the wave degree, the more evidence and strength it is in the conviction that it doesn't happen, that the lower degrees exceed in time the higher degree which it is in. So this may not be probable, and right now it doesn't have the right look to me. This is what we usually look at right now is validity, probability, and the right look. What has the right look, you know? So I don't really see this as having the right look, and I don't see it as very probable right now. And there is another short-term time frame count, which we did allude to it already, but it's essentially looking at it as a leading diagonal here for one, where essentially we still have yet to complete this fifth or the third, depending how you look at it. Once again, you could be looking at this as a larger leading diagonal where it takes more time, comes down like that, instead of just a quick one like this where the three is already completed when we're just about to complete the fourth and go down to the fifth. But this is still valid too. This is still valid, but the three is just very quick in time and it's still a valid ABC because you have the A, B, C right here. It just doesn't have the right look as this diagonal, but there's still potential, you know? There's still potential for this to happen. But truthfully, I'd probably want to see this diagonal develop more as such, like this, and bring this down. But when it comes to Elliott wave, we always try to plan conservatively. We always plan conservatively no matter what. So we stick with conservative, and then we're aware of the aggressive targets of what could happen, and then once we have more price action to play with, we make better informed decisions at that time once we're aware of all the possibilities. But this right now is valid. This looks pretty probable considering the overlapping correction price action right here, just all the zigzags back and forth. And it does have the right look. It looks like it would be a leading diagonal. This one is a little kind of extended right here. It's not that extended, but when we look at leading diagonals or ending diagonals, they usually stay within the price territory of one. And what I mean by that is like you have a one, two, three, four, and then a five. It's kind of one large structure, but this one is kind of like this. It's kind of like A, B, C, D, E. It's kind of like that. It's kind of like a an ending diagonal with the one being so extended. It's not invalid. It's not impossible. It's just unusual. Just like with a triangle. When we get triangles, they're usually like this, right? They're typically not like this, essentially. That's typically not how they are. So usually they stay within the price territory it created to create that large range to trap traders to go short, then long, and short and long, and then finally just break. So it's not impossible. It's just unlikely, but it still looks like a good diagonal forming. So nothing wrong with this count. It's still valid, still probable, and it still has the right look. The only downside with this one is that we would be looking for a breakup where we would break these highs, take some liquidity, and come up here. Depending on how far we go up, I'm not too sure. Um, I'd really probably at least want to see it come up to the previous month point of control right here, pretty much right there. But other than that, this is still just a possibility. It's not really. It's kind of like an alternative, like a short-term alternative. If price breaks this area right here, if price breaks this area, if price doesn't break this area and it continues to make bearish market structure and starts accelerating downward, we will continue to look at the 1-2-1-2. But it's once again, it's not having the right look at this time for me, unfortunately. So, and then I've also been asked about why I don't have a bullish count. It's not that I'm that biased to the downside. I don't have a bullish count. It's just I don't really have a case for one, and it's pretty much would almost be invalidated. If I were to look for a bullish count here, the only way I could see it is with a diagonal, a leading diagonal. Even this is kind of just a little bit forced in my opinion. Let's see. So we'd have essentially an A into a B into a C. This was a double zigzag. We already know that. W, X, Y. This is where it gets a little tricky with this. This leg right here, essentially. This leg right here is too impulsive to really be counted as an ABC. You'd really have to force this as A, B, C. And before I even talk about forcing, let's just go back to our original rule. Is it valid? Let's take a look and see if we can even call it valid, like a valid 1, 2, 3, 4, 5 into an ABC into a 1, 2, 3, 4, 5. Because if it's not valid, I'm not even going to bother looking at it. it'd be really stretching it. This looks like a clean three-way move right here, honestly. Looks like a three-way move. I'm pretty sure we even counted it as a 1, 2, 3, 4, 5. We did. 1, 2, 3, 4, 5 into an A is how we originally counted it. But if we have a 3 into a 4 into a 5, that means we fit an impulse here no matter what. And if we have a triangle right here, we can at least throw the A into the B into the C right here. The only thing that's wrong with this now is that, like I said, this is just it doesn't have the right look, and it's unusual to have such an extended A and have such a short C. It's not invalid. That's the most important thing. We can talk about probability, but when we look at it, it doesn't seem very probable right now, considering we're pretty much close to invalidation. Because ultimately, invalidation is going to be at this point right here, because a two can never go beyond the origin of one. And even if, well, I guess you could say this is an A to B. We're about to finish it, ending diagonal for a C. This would be cutting it really close. So there, we can keep this one as a bullish count, just to kind of look back at in the coming weeks. But the probability of it, I don't see it very high, especially since it's so close to invalidation. And on higher time frame counts, we typically don't see these twos retrace this much, especially if we're expecting a bullish impulse, a bullish up thrust to get us out of this bear market and out of this correction. We would want to see that two pretty much sometimes even bounce out the point 0.5, but mainly be looking for that golden pocket area. We'd be looking for that golden pocket support and bounce off of that area, and it's clearly gone way beyond it. It's pretty much gone to, you could say, the 0.94 essentially, maybe the point 0.9. Yeah, 0.94 looks like, which is pretty deep. So that's why I mean, the reason why I don't have a bullish count like this one is just because it's not because of my bias. I just don't think it's very probable at the time, especially given the news that we had with Mr. Powell just a few days ago. But we'll keep this just in case, just to kind of play around with it and check it out. What do I expect in price action right now? It really just depends on if we break these lows and we continue to have bearish market structure, creating new lower lows, creating new higher highs, new lower lows, higher highs, because I want to see this 3 4 3 4 3 4 get fulfilled. I want to start seeing this acceleration come down. But the more it continues to chop and retrace really hard, the more it seems evident that we are in a contracting diagonal right now. But regardless, we were ready for this. Even in the server, we call this move well in advance. Even we called it somewhere around this point. We told our members to look for a three-way move. I think I even still have the setup here. Told them to wait for a three-way move. We're gonna expect a three-way move right here, and no matter what, this is gonna be a safe trade, no matter what. Because even right here, we're expecting this as a potential um, A into the B into a C. So we did have some directional confluence, a 1 and a 2, or an A into a B, and we were expecting a 3 or a C. So no matter what, this was still a high probability trade and a very safe trade to take, meaning you were essentially catching almost one of the very tops where you would have a very safe entry where you can make a decision either to stay into it or to exit it when you get to this point right here, which it was an extremely safe trade. So not only did we have the three ways right here, we also had an order block we were waiting for, and we were expecting either a complete rejection or a 50% rejection. because normally with these higher time frame order blocks, they do either get rejected immediately or they pretty much go right to the equilibrium. Same with this one right here. This 4 hour one, this bullish order block started right here, ended right there, and went right to the equilibrium and then bounced right away. So they tend to do that a lot. They tend to reject the higher time frame ones or take half of it and reject away. And that's something we were planning for right here. We were planning for that, and we also were planning for the previous week point of control that was untapped at that point too. We did have a previous week point of control right here that was untapped. Then on top of that, we also had a nice OTE setup, an optimal trade entry setup right here, which is something that we always take. I mean, these OTE twos, the OTE wave two setups are pretty much my bread and butter. My bread and butter. I take these almost 80% of the time. Always a safe trade to take. And what I mean by safe trade is you're gonna get that immediate fill and get that rejection away from that zone pretty much all the time. So even though this may not have continued away immediately down and impulse down like we were expecting right here with this, we still had a super safe trade where when we got to this point right here, as a swing trader, we could have made the decision either to get out and wait from a higher price again and get in again, or just to stick with it and just continue to let it continue to progress and develop. And that's what we're all about. We're all about taking those high probability trades where no matter what, you're going to either make the most money you possibly can, or you're still going to make a good chunk because we're catching either one of the good tops or the good bottoms. So these high probability trades is pretty much only done with Elliott wave because we were expecting this three wave move and we were expecting this pattern to occur. Not only that, we did have some, expectations for the FOMC meeting to occur as well. So there was just a lot of confluence that we had there to take this short that we were expecting. Truthfully, I think it makes more sense for market makers essentially to continue to range in this area. And I mean, basically continue forward with this scenario where they continue just to break the lows right here, maybe even just break this low, a nice swing failure pattern potentially. Come down to basically this area and complete the leading diagonal that we're looking for, and then come right back up, take out all of these traders right here and their stop losses, another SFP right here, and then finally come down and break this range. That truly makes the most sense to engineer liquidity for the move down because everyone right now is expecting the move down. It looks pretty clear that we're trending downwards right here. It's very clear that the trend is down. It was clear right here that we were correcting because of how much correction was going on right here, just the overlapping structure. But at this point, it's clear that we're trending down right here. So, given that a lot of traders are expecting to move down, it would only make sense just to fake them out and come back up, fake them out again, and then finally move down with the move down. So I truly think this would be the most probable. It kind of does speak different terms with our primary count where we think the two is done. But once again, that's just me playing conservatively. Honestly, I think it's best to play conservatively and not look at the extremes until we have clear signs to do that. And by clear signs, it would be breaking this high right here. And it would be a nice 1, 2 like this. And then we'd expect either a 5 wave up and then a 3 wave down. And at that point, we'd be looking at the 0.618 or the 0.786 and looking for a rejection up for 3 to 4 to 5 to create this expanded flat right here that we're potentially looking at. So we have possibilities. We wait for price action to form more. We see if there's any price or time invalidations or what the structure is giving us new information at that time. And then we continue to make new informed decisions with the price action that continues to develop. So we do have this as the primary here, that this is the one into the two, and that we're coming down for our 3 right here. But we have yet to see confirmation of this yet. There's no confirmation yet. Regardless of us expecting this, I am expecting us to come down to this zone right here essentially. I I it's kind of hard for me to say because given the strength of this one, given the strength of this one, I would expect, to be honest, I really think that the 3 is going to be shorter than 1 and the 5 is going to be shorter than the 3. I think that this one is very extended. Usually on every single one for a minute time frame, even a minor time frame, they don't go even to 20%. This is even for a minute wave, and especially for wave one, it's very extended. So given that, I can only reasonably assume that 3 won't be extended and 5 won't be extended as well. Truthfully, I really do believe that. But regardless, we do have some heavy targets here, which we've been alluding to in the server as well. We expect a major bounce here at the 12 to 10K. That's really our main targets. We do have a conservative one just because of the weekly and the monthly naked levels right here. But our real target is pretty much right here at the 12 to 10K due to the monthly and the weekly order block and this naked level that we have right here. And this is just a really large psychological level. I mean, it's 10K. It's very psychological, almost more psychological than 50 or 20 or 25. Because if we break this zone, we go back to the 4 digits. So I think this is a very high psychological area. It's even possible we can just wick right through it and come right back up. But mainly, our main target is the 12 to 10K area. That's what we're really looking for right now. And we do have some fibs that line up with it as well. We've got the 0.618 fib log right here. Even for our moderate target, we even have the zero point 0.5 fib log around here. So I do expect us to kind of bounce or range around in this area personally. But given the extension of this one, it leads me to believe that 3 will be less in strength than 1, and 5 will be less in strength than 3 and 1 as well. But those are just my observations based off of the history of Bitcoin and its usual moves and strength for wave ones and for minute waves. That's just my general observations based off of statistics that I have for Bitcoin's price movement. Let me check in the chat. I kind of want to see if we have any questions here. Can't the X1 be a simple ABC? Do you think you could be a little more specific, Rodrigo, like where you're referring to? Let me see. Are you talking about this one right here? Like if we were looking at this as a WXYXZ, or which X were you looking at? If you could tell me the degree, I could probably figure out what you're talking about. But let me see if there's any other questions here. On your nested primary short-term 1-2, should it not break the KC trend line? Yeah, so that's the thing is when it comes to the KC trend lines, they're kind of guidelines to help you if you are in a 1-2-1-2 or if it's a complex 2. And I think it has broken that trend line essentially too. Yeah, it definitely has. I can see it visually. So we have a 0 to 2 trend line right here. It's pretty much already broken that. For more confirmation on that, we'd want to do the second 1-2 trend line. So right here. This is the second 0 to 2 trend line. So this is a 0, this is the 1, and this is the 2. If price starts to come above this, we would either look at this as a complex 2 being formed, like a W, X, and a Y, but essentially it is already so sharp if it did get above that point, we'd probably be looking at the other alternative that we have a move up, because this is already retraced so much. It's unlikely that it would already be a complex two. Usually, complex twos form when it fails to break this trend line early, but if it retraces so much at that point, it's unlikely that it's a complex two, because complex twos either have such little strength in the beginning that they need to make up for it during the more time the correction ensues. So the longer in time, the more intricate it'll become and the more correct it'll become. But if it already was such a sharp two, either that was it or this is something completely different. So yeah, there is cause to concern for that first initial 1-2 KC trend line. But until it breaks the second one, we'll still stick with this. But even now, like I said earlier, it doesn't have the right look for me. It doesn't seem the most probable or the right look to me at this time. I could definitely see other possibilities. I'll take a look at SPX real quick, Sunny. I'll try to go over ETH real quick. I want to try to keep these ones kind of shorter and more central to just updating the counts that we go through on the Sunday streams. But let me go back to Rodrigo's question really quickly, and I'll take a look at the SP. So yeah, that correction, I can't really label it as an ABC because I mean, I guess there's potential. It just depends if you want to try to have this as a is basically a 1 into a 2, 3, short 4 into a 5. So as long as you're okay with having such a short wave 4 in time compared to the 2, which I guess it's not that short. It really isn't. You could still call this a 5 wave for an A, then the complex B wave for the triangle, and then a C. So you'd have to fit a 1, 2, 3, 4, 5 right there. So there's potential. It just doesn't have the right look per se, because when you look at this leg, it definitely looks more reminiscent of a as an A into a B into a C. It just has more of a three wave look better as opposed to a five wave move like that. But it's not invalid. That's the most important thing to take a look at. And remember, once again, we're always talking about validity, probability, and the right look. So let's go over the S&P really quickly if we can. Really want to. I'm not too sure if I want to keep this count. I'm aware of it. I am. I just don't think it's very valid. It's pretty forced just because of this leg right here. Forcing this into a five wave move is kind of forced when especially we did that three into the four into the five right there. But it can be done. And it goes back to our earlier what we were just talking about Bitcoin. It seems forced because this looks like a clean three wave move, right? It doesn't really look like a clean five wave move. It just looks like a clean three wave move. So this one's iffy just because of that, but this is also why we have this to keep this simple in case that this turns into a W. So like this will actually be a W into an X into Y. That's the reason why we try to keep things as simple as possible due to that. But the main count that we have is the WXYXZ, where we had a zigzag for the W, flat for the X, zigzag for the Y, and then we had a zigzag for the X right here. We're going to expect another zigzag out of this Z right here. This is exhibiting what we call no alteration, which means it's going to be a triple zigzag. We've got zigzag, pullback, zigzag, pullback, another zigzag. basically what we're getting right now. So we're going to expect another zigzag to form right here, which we pretty much are seeing. Yeah, yeah, no, looks like this was one, two, three, four, five for an A, expanded flat for a B, and now we're starting to impulse down one, two, three right here for this three into the fourth, into the fifth. Just like with Bitcoin, I'm expecting like either I really think it's November, but it could be October. I think either November we're just going to range for a whole month for this minute four. Same with Bitcoin. I'm expecting a whole month of ranging for basically this minute four. So we continue this trend down, continue the bearish market structure, get people to continue shorting, and then once we have officially, broken this lower low, and we've completed a five wave structure where we have this is a one, two, three, four, five. Once we get to that fifth of the third right here, we're going to expect this four to take a really long time. Like I said, probably about a month or so and start ranging. And then for the yearly close, we'll have that final fifth of a C, of a Z, of a four. Just like with Bitcoin, how we kind of expect a either at the end of the year or in the first few months, like around like February, March, because March is a great month for crypto. It does explode a few times from the past few Marches, but I do expect either something to happen at the very end of the year or the beginning of the next year. But this is kind of what I'm seeing right here. I can still see us pushing down. This count isn't invalidated yet, but it is so close to being invalidated, just like with the bullish one on Bitcoin. It's still valid though. Let's see. This is kind of really like the last point of support, just how we were looking at it right here. This area is really, if it loses this area, it's kind of a done deal. But this is still valid. We still have a one, two, three, four, five, A, B, C down, and potential three, four, five up. May not be the most probable right now, but it's still valid. And then Ethereum, I don't think I've really looked at Ethereum too closely here the past few days. Let's take a look at her. What are we looking at right here? Double zigzag. Y to B. A. Okay, I see. Let's see here. And then what else do we have? Just the bullish one, right? I think that's all we had left was the bullish count. Just like with the SPX. 1, ABC 2. Let me see. Yeah, this is still valid too. I just don't think it's the most likely right now. I might have to look at different midterm time frame counts for Ethereum, but it's still hard to decipher if this is completed yet because once again, when we have an extension with an extension and all these legs are pretty much the same in time and strength, it's sometimes hard to discern which one has the extended leg in it. And that's why even still looking at this right now, I'm going to base it off the swing structure and also based off of if these pullbacks continue to be three waves or not. Because we've got one, two, three, four, five, six, seven, eight, nine. Once we get a final nine wave structure, it's usually signifying the end of extension within a wave. Because looking at this right now, it'd be hard to tell if the extension was in the first wave if it was in the third wave, or if it was in the fifth wave, essentially. You wouldn't know. But that's why we kind of sometimes base things off of swing structure. If each conceding wave is the same in time and strength and price, once we get 9 swings, we know that there is a single extension that was completed within this leg, and then we're expecting a pullback, and that'll be 10 legs right there. But it depends if we continue this bearish market structure. So if we continue this bearish market structure and we have 10, we're going to expect that 11th, and that'll mean that there was two extensions within this. So 9 swings equals one extension. 11 swings equals two extensions within the leg, and 13 swings equal three extensions on the leg. It all just matters on how these pullbacks and the continuations form, because this looks like it's another three-wave structure right here, A, B, C. That could have just been our 10th right there, and now we're coming down for an 11th structure. And depending on how this one looks, the pullback will either expect the 12th and the final 13th, or it was only a double extension and that was it. And then we'll see a large correction afterwards. So even now, even at this point, I I can't even tell you if these extensions are really done or not. It really, there's no way to put a final confirmation on it. The only way we would truly know is once it starts to break market structure heavily and have a change of character. And by that I mean breaking the prior higher low and make a new higher high and then a higher low and continuing with new market structure. The only thing you can do is play the swing structure and think in three waves. So always try to get out for that C wave. Just plan for three waves always. Don't try to plan for one, two, three, four, five. That's the only thing that will save you in these type of extensions when they're so similar. Each leg is so similar. You're basically just going to play every third wave and also just play off the swing structure. So right when it hits the ninth swing structure, you're going to play this for a three wave, just like how we're expecting last stream. And then, like I said, once we get to this area and we impulse down and we get a 10 and we come up for to finish the next structure, we're going to look for the same thing. We're going to look for a three wave pullback right here. This one was a little bit weak in terms of price extension and time. It didn't exceed in time like these ones, but it was still a three-way structure. And you would have still made some good money off of this because you would have waited for the A, you would have waited for the retrace, and then you would have gone on the retrace and gone up for that third wave, and then got out for the third wave. But truthfully, if we are to look at crypto as a whole, I do think that Ethereum is going to make new lower lows just like Bitcoin. It does have a ways to go though. I would stick more towards this one, that we completed the correction up here and that we are impulsing down for one into two. And then we can have another potential one into a two where it comes back into this price territory. So nice classic one, one, two, and then accelerate down. So there's always potential for that. I would stick more towards this one just because Ethereum does follow Bitcoin. I mean, Bitcoin is king. It really is. That's what I see. Let me see if there's any more questions here. Looks like I don't really see any other questions, but like I always say, I'm always willing to answer any questions in the server, and I pretty much answer them almost within the hour or same day for sure. So if you ever have any questions, you can always message me publicly or I don't really respond to private messages unless it's like direct questions that you don't really feel comfortable asking publicly. So if you don't feel comfortable asking publicly, you can definitely private message me a question about like charting and anything like that, and I'm happy to respond to that. But regardless, I'm always trying to stay active with you guys here in the server too. So feel free to always ping me if you need anything at all. But I'm gonna try to do this every single midweek to just do a weekly update. And I know I tend to go on long, but there's a lot to talk about and there's a lot to cover, and I want to make sure I'm covering everything too. So I'll start to work on trying to keep it shorter and sweeter, and just going over the main points. But I do like giving you guys a lot of information, and explaining the reasons behind that information I'm giving you, instead of just giving you random information. But other than that, I definitely appreciate everybody showing up, and I hope everyone has a great rest of your day. And if you guys need anything, just reach out to me. But thank you guys for your time, and have a good day.